The last few days have been rough. Tech and AI stocks got crushed, crypto-related stocks sold off, and Bitcoin slipped back toward that 100K zone. When Wall Street turns risk off, it does not stop with Nvidia and big tech. It spills over into Bitcoin now too because institutions hold a lot of BTC. When they de-risk, they often sell across the board. On top of that, there is growing talk of an AI bubble. Big funds are nervous that AI names have run too far, too fast. Instead of calmly trimming positions, they dump together just like retail panic selling at the bottom. The idea that Wall Street is smarter or more disciplined than normal investors often turns out to be a myth. They chase, they FOMO, and they panic, just like everyone else. Then you have the government shutdown, which is not some background detail. Flights are being canceled or delayed, airports are jammed, and hundreds of thousands of government workers are sitting at home without normal operations. Important data like unemployment numbers are not being released on schedule. The market hates that kind of uncertainty. Every extra day this drags on, confidence falls and fear rises. All of this hits at the same time. AI bubble fear, shutdown stress, missing data, and global warnings from big banks saying prepare for volatility. That cocktail creates exactly what we see now. A heavy mood, nervous selling, and people asking if the bubble is bursting. It feels like sentiment just flipped from "we're going to the moon" to "this is over in a few days." But feeling and reality are not the same thing. Now let's look at Bitcoin itself. Yes, the price has been pushed down. Yes, altcoins have dropped even harder. On the chart, it looks ugly. But underneath that price action, there are some very important signals that do not match the "it's all over" narrative. If this really was the end, you would expect spot Bitcoin ETFs to show huge outflows on a big red day. That would mean institutions and serious investors are dumping. Instead, we saw the opposite. On one of the worst days this week, spot Bitcoin ETFs recorded around $240 million in net inflows. Not one major fund went negative on flows that day. Ethereum products, apart from a small sale by Grayscale, also saw net inflows. Even Solana funds had positive numbers. That is not what capitulation looks like. That is smart money buying the dip. Long-term players are clearly saying, these prices are good enough for us to add more. The whole week may still lean red on flows, but a strong green day in the middle of panic shows that belief has not disappeared. Look at what big companies are doing too. MicroStrategy continues to raise capital and buy more Bitcoin. They are even launching new vehicles overseas to expand that strategy. Tether, the largest stablecoin issuer in the world, just bought another $1 billion worth of Bitcoin on the dip. They are now sitting on billions in unrealized profits and still increasing their stack. There are also serious rumors that companies like Nvidia could eventually allocate part of their massive cash reserves into Bitcoin. Whether that happens or not, the logic makes sense. These firms generate so much profit that they cannot spend it all on acquisitions due to antitrust concerns. Parking some of that cash in Bitcoin as a long-term hedge starts to look attractive compared to buying gold or just sitting in fiat. So while short-term price is weak, the long-term fundamentals are doing the opposite of collapsing. More institutional adoption, more corporate buyers, more long-term holders using dips to accumulate. The thing that hasn't been strong lately is price action, not the core story of Bitcoin. When you are in the middle of a drawdown, it always feels like the worst one. But if you zoom out, you see this is just another chapter in a long book. On-chain data shows that when average realized losses hit a certain level, often around 11 to 12%, those moments tend to line up with local bottoms. That means a lot of people are selling at a loss right now. They bought high, they got scared, and they are exiting at bad prices. It is honestly surprising that so many traders are underwater when you look at the last couple of years. We went from the 50K range to 70K to the 80s and 90s, and then up to 120K. If you were dollar cost averaging, you are probably not sitting at an 11% loss. But this is the reality of how many people behave. They ignore Bitcoin when it is cheap, chase it when it is expensive, and then bail when it corrects. That exact crowd behavior is what creates opportunity for more patient investors. Look back further. In 2019, during another government shutdown, Bitcoin was around $4,000. From there, it ran to $14,000, then crashed to $3,000 during COVID, then later went on to break all-time highs again. A few years ago, you could buy BTC at 4K, 5K, 10K. Now, people are panicking at 100K. The scale is different, but the fear is exactly the same. If you compare what is happening now to late 2024 and early 2025, the pattern also looks familiar. We had a peak, a grind down, months of sideways and lower highs, constant talk that Bitcoin is dead, and then finally a breakout when almost everyone was exhausted. People forget how bad it felt at the time once price recovers. The key thing to understand is this: the factors crushing sentiment right now are serious, but they are not permanent. Government shutdowns end. Tariff disputes get resolved. AI panic cools off. None of these are deep protocol-level threats to Bitcoin. A real fundamental shift would be something like a proven quantum attack on SHA-256. That would be massive and require a serious response. The current issues are more like storms. Noisy, damaging in the short term, but not permanent changes to the landscape. One of the weirdest things happening right now is what you see in the altcoin space. While most of the market bleeds, some random coins are pumping hard. First, it was privacy coins like Zcash taking off. Then you see Filecoin suddenly up 60 to 70% in a day. ICP, Near, meme tokens, Ethereum Classic, and others jumping 20% or more with no major news. Articles will say things like technical breakout or bullish pattern, but let's be honest, that is not a real explanation for such big single-day moves. When you see groups of unrelated coins exploding on days when the rest of the market is weak, it usually means whales and large traders are rotating capital and trying to spark momentum. It looks a lot like the early stirrings of altcoin speculation that we have seen in past cycles. Does that mean a full-blown alt season is about to start? Not necessarily. It could be the first test. Maybe large players are probing the market, seeing what they can move, trying to get retail interested again. Or it could just be short-lived pumps that fade quickly. The truth is, no one knows for sure yet, but it is a sign that money is still in the system and looking for action. For you, the important thing is not to chase blindly. When everyone suddenly becomes a fan of a coin they ignored for years, that is often late, not early. Zcash, Filecoin, Ethereum Classic, and many others are not new miracles. They have had huge cycles before, then crashed, then went quiet. Privacy coins in particular carry extra regulatory risk. Many exchanges have delisted them. If you truly believe in their use case and are ready for the volatility and legal headwinds, that is your choice. Just do not confuse FOMO with conviction. The same goes for meme coins and hyped narratives. Communities are loud when price is up, but when momentum dies, many of those people disappear. That is why having a core strategy matters. For most long-term investors, it starts with Bitcoin, maybe some Ethereum, and then a small allocation to carefully chosen altcoins you understand and truly want to hold. So, is this the end for Bitcoin and crypto? Based on everything we just walked through, no. It is a rough patch, but not a funeral. Fundamentals are stronger than ever. Big players are buying dips through ETFs and treasury strategies. Short-term sentiment is awful, but that has been true many times before at much lower prices. Right now is when emotional traders panic and long-term thinkers quietly build. You have to decide which group you want to be in. Zoom out, remember what Bitcoin has survived already, and understand that none of the current macro problems are permanent. They will pass. When they do, the people who stayed, accumulated wisely, and avoided FOMO and fear are usually the ones who come out ahead. If you found this helpful, hit like, subscribe, and tell me in the comments how you're handling this volatility. Stay strong, stay calm, and I'll see you in the next one.